Have you ever felt like you're doing everything right when it comes to investing, but your portfolio just isn't growing the way you'd hoped? Or maybe you've been putting off investing altogether because you've bought into some common myths about it. Well, today we're going to bust those myths wide open and show you what you should be doing instead to build real wealth. Myth number 1. Investing is only for the rich. This is one of the biggest myths out there, and it's keeping so many people from even getting started with investing. The truth is, you don't need to be wealthy to invest. Thanks to apps, robo-advisors, and low-cost index funds, it's easier than ever for regular folks to get started investing with just a small amount of money. What to do instead? Take advantage of tax-advantaged retirement accounts like 401ks and IRAs that allow you to invest small amounts over time through payroll deductions or automatic transfers. That's how normal people build wealth. Myth number 2. You need to constantly watch the markets and trade stocks. This myth leads people to think investing is this frenetic, stressful game of trying to time the markets and make trades at just the right moment. Not only is that incredibly stressful, but study after study shows that active trading actually underperforms a simple buy and hold strategy in the long run. What to do instead? Build a diversified portfolio of low-cost index funds and resist the urge to constantly buy and sell. Find an asset allocation that fits your risk tolerance and investment timeline, and stick to it through the ups and downs. Myth number 3. Investing is just too risky. For a lot of people, the word investing might as well be a synonym for gambling. They think it's all about throwing money away on speculative bets. But the reality is, investing in a diversified portfolio doesn't have to be all that risky, especially when you have a long time horizon. What to do instead? Focus on creating a balanced, diversified portfolio of stocks and bonds that aligns with your risk tolerance. Consider your age and investment timeline. The younger you are, the more you can lean into stocks and ride out the short-term volatility. Over time, a diversified stock portfolio has historically provided much better returns than keeping your money in savings. Myth number 4. You should wait until you have a lot to invest. There's this mistaken belief that you need some huge lump sum of cash before you can start investing in a meaningful way. So people just keep putting it off and putting it off, waiting until they have tens of thousands or even hundreds of thousands to invest. What to do instead? The truth is, the sooner you start investing even with tiny amounts, the more you'll be able to take advantage of the miracle of compound growth over time. Even just investing $50 or $100 per month from an early age can grow into a huge sum eventually, thanks to compounding. The key is to start early and stick with it consistently. Myth number 5. You should invest in whatever is popular or hot. Fear of missing out is a powerful thing in the investing world. Whenever a certain stock, cryptocurrency, sector, etc. gets really trendy and popular, tons of novice investors want to jump on board without really understanding what they're getting into. What to do instead? Run far away from investments that you don't fully grasp or that seem overheated and driven purely by hype. Focus on investments that fit your personal goals and risk tolerance. Just because something is popular doesn't make it a smart choice for your specific situation. Myth number 6. Investing is way too complicated and confusing. This myth leads people to feel paralyzed and unable to even get started investing because they think it's this impossibly complex world of charts, jargon, and arcane rules that they'll never be able to wrap their heads around. What to do instead? These days, getting started with smart, simple investing is incredibly easy and straightforward, especially with the rise of robo-advisors and app-based platforms. Focus on the basic concepts of asset allocation, diversification, and letting compound growth work its magic over time. Start simple and slowly build your knowledge over time as you become a more seasoned investor. Conclusion. There you have it, 6 of the most persistent investing myths that lead people to make poor decisions and sacrifice long-term wealth building. The sad truth is that a lot of these myths get perpetuated by the financial industry itself, which wants to convince you that investing is impossibly confusing and risky so that you'll pay them hefty fees for expert advice. But as we've covered here today, successful investing doesn't have to be complicated, stressful, or reserved only for the ultra-wealthy. By avoiding these myths, sticking to the fundamentals, and getting started sooner rather than later, anyone can build wealth over time through smart, diversified investing. It may not be as sexy as trying to chase hot stocks or time the markets, but slow and steady, diversified investing is what actually wins the race when it comes to growing your net worth. So commit today to ditching these toxic myths, facing your investing fears head-on, and starting down the smart, sustainable path to building real wealth over time. With discipline and patience, investing can truly be the opportunity equalizer and the key to creating financial freedom for yourself and your loved ones.